all the other super cycles, they've gone validated and they're not really small caps anymore. Like that's why it's nauseating for me.
Welcome back, everyone, to episode 24 of Investing with the Boys. We have Logical back from the dead. We have Shy back with the trio again, and myself, Sam, ready to kick it off. Could this be the beginning of a correction in the stock market? I do wonder, because we've literally been going straight up, not even pulling back by more than 3% since the April bottom. And here we are today, not even 2% from the highs. But I just feel like something's a little bit different here. So why don't we just start off right into that, and then we'll get into some more juicy stuff. Logical, what are your prospects about the market today?
Well, I think that a lot of things have run a lot. That's no surprise to anyone. I mean, we're seeing kind of, I don't know if I would say that this necessarily is a blow off top in a lot of, hype names, the pre-revenue companies. We've seen things like the nuclear names like Oklo just go straight vertical. We've seen the quantum sector go straight up. I mean, there's a lot of stuff going on in those specific sectors. But I think if you look outside of that, it's okay. I mean, yes, valuations are getting stretched a bit. I wouldn't necessarily chase things that have been up 1, 2, 3, 400% in this year. That seems pretty ridiculous. But I would look for pockets of value, which is what I've been doing. Now, that said, I've been noticing a little bit of stalling and exhaustion in the tech names. I think it's weird, though. This price action just goes back and forth. I guess I would call that choppy. And so when it comes to this chop, I would kind of look at it as maybe a sort of consolidation, which isn't necessarily bad. Consolidation is fine. Every day that passes on and the price doesn't increase, that means that we're kind of growing into the valuations that we've run up to. So chop, sideways chop, that looks good to me. That said, I don't necessarily want to sit in a lot of these names from a trade perspective. I think that the risk reward doesn't look as appealing, right? Because you don't want to be the one that ends up holding the bag. So I'd rather kind of let the market find its footing and then participate, because these tech names are doing a great job of shaking people out. You get a breakout and then the next 2-3 sessions are boom, right back down to red, and all momentum is lost. It feels like exhaustive action. It feels like distribution days. People are like looking at these pops, like basically the sell the rip crowd is there in tech. I could feel it when I trade. So, obviously yesterday people were probably caught off guard when we had a lot of red in the market. I actually had a plus 6% day. It was an incredible day. And no, as much as I'm in the biotechs, I actually wasn't in UniQure, which, by the way, we'll talk about a little bit later, had groundbreaking 3-year data in Huntington's disease, and they're slowing the progression of that horrible disease. So really groundbreaking stuff there. And ClearPoint Neuro, who they're partnered with, we've talked about on this podcast quite a few times. Those were up. UniQure was up like 250% yesterday, rightfully so. ClearPoint up 60% or so on the day yesterday. I wasn't long those names into that data readout. I wasn't too sure which way the data readout would have gone. I actually ended up entering those positions after the fact. When it comes to bios, I really like to wait for the catalyst binary event to pass. And then even though the reward goes down moving forward, the risk also goes down, and I would say to a greater extent, making the risk reward ratio look even better from that point. So that's just 2 names, obviously, because what I wanted to talk about here is the bios, which I've been pounding the table on, have been doing incredibly well. Names like Nectar Therapeutics after the data readout. I mean, that thing has run after the data readout, went to 37, came back to 22, now is touching $60. You had chances to buy it after the binary catalyst and watch it triple almost. So, there's names like that. There's ABVX, had great data in UC. We have, there's just a lot of names. CDTX looking like a good buyout candidate. They had some good news yesterday. It was up 21% on the day. Zevra Therapeutics is another one that has some buyout rumors, potential speculation there. That was up like 10, 11% on the day. So there's pockets of strength, but I'm seeing the pockets in the biotech side, which is something that I'm really happy to see, because after 4 years of a biotech bear market, brutal, 2023 didn't participate, 2024 didn't participate. And then now we're finally starting to see the XBI break above the 200-week moving average. And the last time it did that in a sustainable manner was over like 10, 12 years ago. And it led to a basically decade-long biotech bull market. So I would love to see that continued outperformance there. We're getting a like treasure trove of data from all these different companies. You have rates coming down from the Fed. That is going to have these CFOs at these cash-rich biopharmas questioning their capital allocation methods. And if you don't snatch up these, cheap biotech stocks, they're not going to be cheap for too long. So you better jump on those opportunities. And we've had a record M&A year already, and it's just September. So anyways, I talked a lot. Biotechs were a pocket of strength. Tech kind of stalling here. Nothing too scary quite yet. Valuation's a little stretch. We could do with a little bit of consolidation. I'm not too scared right now. I'm still pushing my exposure. But anyways, Shai, I talked a lot. Let me get your take on what's been going on.
No, this is good. I like it. I mean, listen, when you have a 130% year-to-date performance, you should get a lot off the spotlight. But regarding biotechs, I mean, that is kind of where I've been positioning my small cap portfolio, mainly because all the other super cycles, they've gone validated and they're not really small caps anymore. Like that's why it's nauseating for me. Like I own IonQ, I own Rocket Lab, I own ASTS in my small cap portfolio. They were small caps when I started buying them a couple years ago. Proof in the pudding. There's all these results I have in my Savvy Trader validated by a third party. I bought all three of those companies under our $2 billion market cap. Back then, 100% they were small caps. Now they've 10x, almost every single one has 10x actually, which is kind of crazy. That is the dream of a small cap investor. You participate in an early disruptor in a secular growth theme with a ton of runway. They are a category leader. And as the bucket gets re-rated, these names, these companies are leading this category, run the most. And they also have staying power. So now every single year, I usually have a theme. AI, space, quantum, electrification. These have been my themes the past couple of years, my small cap portfolio. What's my theme now? It's kind of biotech. I really do believe that ClearPoint, it's as crazy as it sounds after this massive move, it's my second biggest position, my small cap now. Why is that? It went up 60% yesterday. I think it went up another 6 or 7% today. Great follow through day, by the way. That screams to me re-rating, not just a gap up on some short squeeze, because guess what? Today was an ugly, ugly day for small cap growth investors. Like it was not pretty. Indices, QQQ was down 0.5%, but like if you're a small cap investor, like almost every single winner has faded aggressively today, down 7 to 10%. ClearPoint didn't. It showed strength in a strong red tape day. So I think that the re-rating will continue for that name. And it's kind of one of those names where I've been building my position all summer, because where else would I build it in? I don't feel I was very early in IonQ. Don't feel the need to add at all at $75. Rocket Lab, I've been adding slowly in my growth portfolio, but my small cap, I don't need to. It's 15%. It's my number one position. What's the other one? ASTS, like again, got into teens. Started building aggressively in the teens. Started in like the low 4 or 5, but really aggressive in the teens. Don't need to add from there. A lot of these names re-rated. So rather than sitting on my hands, I have capital to employ. Where is it? It's ClearPoint. Another theme, CRISPR names. I think that Verve Therapeutic, ticker VERV, like when they got acquired for $1.3 billion, they are kind of the unwanted child among the CRISPR family. Like everyone universally agrees that this is kind of the lowest ceiling among that group. And they got $1.3 billion with the biggest lagger of data as well. So what does it tell you about Beam? What does it tell you about Prime? What does that tell you about Intelia? That whole bucket deserves a re-rating, because the first time since any of those companies went public, we have a benchmark now on what the valuation should be on a buyout. So I also started adding those names this past summer. And now, like, I'm trying to see today's strength. Like they showed somewhat of strength. They were green earlier, but now they faded. I just think that this combined with like, there's a theme where biotechs, CRISPR names, genomics, they've been penalized for years. Doesn't mean, like, if you look at the stock price, you probably see like something messed up on their thesis. It wasn't the case. It was higher for longer interest rates. And now they've been beasting for years, and they're breaking out because we've begun a rate cut cycle. And now there is actual alpha to be made, not just on valuation. The human data validates the science. It's that there is an M&A spree in that whole space. Working capital doesn't get a couple percentages anymore. It has to get reallocated into the markets. And now you can buy a lot of pipeline drugs essentially at a fraction of what they were a couple years ago. And they're going to be really aggressive with that. So I think that I do like biotech. I do like ClearPoint, for example. Like that's still a $600 million company. And I think that for ClearPoint, a lot of people need to realize like what they actually do. I like to dumb it down as much as calling them the Google Maps for neurosurgeons. But the QURE Huntington data, for example, is a perfect example of why ClearPoint matters, because it was one of their most ambitious programs in neuro, solving Huntington's disease. Like it's a brutal disease. I'm sure a lot of people know about it. It's awful, but ClearPoint's machines are able to deliver that gene therapy in a region that is not only deep and sensitive, but somehow requires this like bilateral infusion. So without the ClearPoint's MRI guided navigation, like that delivery is almost impossible. I wouldn't say completely, but it's very, very difficult to execute with the accuracy required. So like this trial wasn't just a positivity for QURE. It was also a huge sentiment win for ClearPoint, because it wasn't, it validates kind of like what ClearPoint's platform can do in the most toughest possible use cases. So like, I think that this is a name that clearly caught a lot of people's attention. It's hasn't really ran if you zoom out, and it's one that I'm not trimming. It's my number 2 position, and I think it's going to continue to run. I don't know, Sam, what is kind of your thoughts on? Clearly, Logical and I are very bullish on biotech. Like, do you kind of have any kind of exposure in the biotech space, or like how are you positioning?
I can't even tell if you guys are long biotech. Just kidding around. It's pretty clear that you guys are long biotech, and I feel like a straggler in the room because this is a sector that's my alpha is not in. I mean, there's always Warren Buffett saying, and also Peter Lynch, he's also attributed to it, is, don't invest in sectors that you're not good in, or that you're not too familiar with. Invest in where your strengths are. For me, that's mostly technology. Like, I'm a software engineer, I work in IT by practice, and I really side more toward software companies, data companies, hardware companies, and so on, especially semiconductors. I kind of understand how that works. Getting into biotech, I don't really know exactly how this whole field works. But on top of that, I mean, you guys probably know, biotech is very risky sector. Like, you could literally have a failed trial one day and the stock can drop like 50, 60%. We saw the same. Oh, go ahead.
No, I was gonna say, that's exactly why, like, when Logical got into those names, people are like, why would you get in those names after it ran up so much?
Yeah.
They don't understand. It got de-risked. Like, it is an actual lottery play a lot of times with biotech with data. Like, you just don't know. The environment got a lot more clarity after that data read. So now when you participate after ClearPoint went up 20%, for example, you miss out on a 40+% move after that. I don't know what the move was for QURE, but like, I think you probably know more Logical about like what that move was. But
tomorrow's move was 250. Sorry, yesterday's move.
Yeah, after he got the data release, like what was the move from the data release to like?
I mean, it went to one. So yeah, I mean, it went. The thing is, like, the stock went down from 18 to 13. Shorts were piling in, and then they released the data, and I don't think anyone was on sides for that. And in pre-market, it's trading up to like 25, $30. And then it quickly gets to $40. I actually entered at 40, and it basically finished the day near $50. They did and they did a raise after the bell, and the stock traded up on that, and it was up again today. So clearly, really strong demand for this. They had to raise. It makes sense. They have a strong pipeline. They have like the epilepsy treatment, which uses the same platform as the Huntington's disease treatment. So there is a lot of, like, that's not being priced in at all. Obviously, that's much earlier stage. But yeah, I mean, that thing was up. Opened up plus 150, basically closed at like plus 250. So pretty crazy day and well deserved.
See, ratings are explosive, but Sam, I do want to ask you about this. Another hot pocket stock that kind of had a similar offering and did not react accordingly. CIFR. I think we're both bullish on the AI utility trade.
Yeah.
CIFR just announced a Google deal.
That was
up
big.
18%. Yeah, I think it was up 20% pre-market. I think they finished down 18%. So it's like a 40% swing.
So getting into the AI data center theme, I've gotten pretty early on Nebius, and you guys are bullish too, which is great. Because when I got into Nebius, it was like pretty early, and not that that's like, hey, I got in early, but like they didn't really sign like a big contract with a major hyperscaler like Microsoft. They didn't have any of that. So I wouldn't say they need to prove themselves, but they definitely prove themselves to the market, and it's just been pushing new highs every day. But the other theme that's happening right now with these Bitcoin mining companies turning into data centers is that they have all this compute already in stock. They know how to scale out pretty quickly. But on top of that, because they have the compute available, they can actually pivot very quickly to make compute available to hyperscalers who are just signing contracts and just building new data centers hand over fist. We had the announcements, multiple announcements from Oracle, NVIDIA, and OpenAI that they want to build up to $1 trillion of data centers. First it was crazy to hear about 1 gigawatt data centers. Now we're hearing about 10 gigawatts and so on. And Sam Altman was interviewed and he was like, oh, we need to build a gigawatt data center every single week. And it sounds pretty crazy to fathom right now, but I'm not saying we're going to be there in the next 5 or 10 years. But if you can really envision how efficient a lot of these products are getting, how much cheaper they're actually getting as time does present itself, then maybe that's not unrealistic to think as far as getting there. We are building data centers at scale, but to sign a lot of these contracts, a lot of companies are doing, they need the compute fast to meet the demand. So that's why they turn into companies that have this compute available. And a lot of that are Bitcoin miners. And one of the first deals that came out where it was one of the first successful Bitcoin miners turned into a data center, at least having a data center segment or service, was Core Scientific. You guys probably already know about that one. CoreWeave was looking to acquire Core Scientific and they signed a deal, Like, obviously, there was a lot more nuances attached to that theme. But that was when the market started to realize, like, hold on a second. We also have these other companies that are Bitcoin miners, like IREN, for example. IREN used to be a Bitcoin miner. CIFR was also a Bitcoin miner as well. They transitioned a lot of their compute into data center. TeraWulf as well. So the next one after that was TeraWulf. TeraWulf signed a contract with Google, and Google basically took a stake in TeraWulf in the form of warrants. And TeraWulf rallied off of that. And the rest of the entire sector started running. But fast forward to today, like they're up like 2-3 times in the last month. And like, why is this happening? It's happening because the market is trying to front run it. So IREN hasn't gotten that contract yet from a hyperscaler, but the reason why it's running is because the market's expecting it to happen. What we saw this morning was that Google decided to go with CIFR mining to sign up for compute, and the agreement was in exchange to buy warrants of the company at a certain price. I forget the exact dollar amount, but yeah, CIFR was up. Like when I saw it, it was up 9% pre-market, so maybe it was up 20% at one time. And then CIFR decided to issue convertible shares I think it was about 930 million. And the stock basically plunged intraday about 20%. And I think it closed down, like you said, about 18% today. A big 180. Why did they issue the shares? Well, like we saw with Nebius, after they had to deal with Microsoft, the stock basically ran up almost 50, 60, 70%. And then shortly after that, they issued an offering. I think it was up to 3 or 4 billion. And the stock sold off a little bit, but didn't get sold off that much. And the reason why was because this is not a cheap business to build data centers. It is a massive CapEx injection to build data centers. You need the materials, you need the land, you need the equipment, you need all the workers, everything. There's a reason why Microsoft turned to Nebius for it, because Nebius knows how to do it from bottom up. They own the entire stack, and they've been doing it for decades. So I thought that was a great idea to go with Nebius. And now, how many of these players are around where they could actually do that? That's why they're going to Bitcoin miners to do that. But when you saw Nebius issue those shares or issue the dilution, it didn't fall as much because that was already expected. That's what the CEO has been saying for quite some time. It's not a matter of if we dilute, it's a matter of when, because they need the CapEx. CIFR, people probably didn't really expect that. right? It's a much smaller company. They obviously had not had that much ground in the AI data center realm. Nebius is very well diversified into multiple businesses. CIFR, not so much. You just had the Bitcoin mining. They have the AI data center. Not saying that that's not going to go anywhere, but maybe it was kind of disappointing for the market, so they sold it off. But, the market was down today, so maybe it was just a de-risking event. Now, IREN, I thought I was late in this. I got in at $21, and this was after it already did it 3 times. And my reasoning for that was a little bit more of a speculative play, but I had a little bit more conviction in it, mostly because they were already a profitable mining business. They were just adding on a data center segment that would hopefully be available to a large hyperscaler. They have a bunch of small contracts as well, but again, I think their prospects are to increase their data center capacity by 1 or 2-fold in the next year. That's a big move, right? So why are they doing this? Is there a pipeline in the works? Well, I think that's what the market is speculating. So I think that this theme is going to continue happening as long as demand is still through the roof and supply can't meet that. You even had the semi-annual analysis report saying that Amazon is going to build Anthropic a data center, and semi-analysis is speculating that, well, not speculating, but they're calculating that Amazon is going to reaccelerate its AWS top line to 20%. And this is already a $120 billion run rate company, right? So you have Amazon, which is obviously a very big company, and then you have AWS, which is its bread and butter when it comes to Amazon. Growing at 20% is pretty big. That's $20 billion extra year over year. So what is Amazon going to do? Are they going to build their own data centers? Are they going to go with the big player? They're going to go to Bitcoin miner? That is the reason why this is all picking up steam, because the market's trying to front run it versus catching up when they did Nebius. Now they're trying to front run it. So it's a little bit of a different story.
Yeah, I mean, I participated in the AI utility trade today. So
right.
I'm late, but I think it's fine to be later than you've initially were comfortable with, because I do think that the AI theme has got to de-risked a bit. I know I'm like the minority in that thesis, but I truly don't think we're anywhere close to the data centers we need right now to hit that middle of that S curve. Like, I think we're so early on that first leg of that S curve. Like, I am underwriting. I've been pushing this timeline out because every 3 months I'm reminded, like, the AI pie is a lot bigger than I anticipated. I think 2027, 2028 will be that digestion period of maybe the supply and demand starting to become more aligned. Because right now, the reason I participate in CIFR as a tracking position, it's more of a leverage proxy for me on the AI shortage. That is absolutely clear to me that there is an insatiable demand right now for compute, and especially data centers for AI. So I do think that it's going to take this whole bucket of the IRENs, the CIFRs, Nebiuses, like these CoreWeave, these Neoclouds come and AI utility plays, like they're going to soar when compute demand outpaces the supply. I think that's going to happen in the next couple years. So it's more of like a short-term hold for me, because I know there's going to be a moment when hyperscalers catch up. Like, there's going to, the economics they need to catch up eventually.
Quick question.
Yeah.
Sorry, can I just cut in?
Yeah.
Just because this CIFR, I mean, you mentioned that they had the Google news yesterday, and then I think they did a equity raise, right? And then
CIFR, yeah, they did this morning.
And then they're down 17%. I'm looking at the candle today. It is like the all-time high. So a big thing that I've noticed during this bull run with like the best traders on the platform, they've been highlighting when a stock has an HVE, highest volume ever candle. This is CIFR, which, by the way, back in June when this thing was, I was actually long the stock from $4 to $6, and I missed the next like 200%. That's always my style. I always end up leaving too early. But basically that stock had like the highest volume ever candle, like 5 in a row when it went from $4 to $6. And I was very intrigued. Today, the candle you see today on the minus 17% day, huge red candle, is 2 times that highest volume ever in the prior candles. That seems like huge distribution. And so, obviously there's a buyer for every seller, and I get that, but it pushed the price quite down. So I don't know. How do you think about like you entering today? And I'm assuming you entered like after it faded like big
Oh,
action
yeah.
down.
Yeah,
but
it's like
just a
12
really ugly
bucks.
thing. Yeah. So what are your
No,
thoughts
Bottom
on
calling
this action?
Shy.
I think first off, it's more of a tracking. I think Iris or Iron, Iris Energy, but everyone calls them Iron. That
Yeah.
is a much better play in my opinion between the
It
two
is.
companies.
I think so.
I think the way again, I'm very green in the space. I am still learning more about AI utility. It's something that I thought I was actually. You guys know this. I was kind of bearish in this whole Neocloud and these kind of company AI utility plays because I know it was a moment they're capturing. I just didn't realize the moment is so great for the supply and demand skew. But the reason today was kind of like what just happened. I think it's a combination of crypto also. It was really bad today. I think Ethereum broke like 3,800. I think a lot of people didn't even think it'd break 4K. I think Bitcoin was under 110,000 as well. Like the indices were like QQQ was down 0.5% eventually, SPY 0.4, but the crypto really tanked. So I think there was a combination of miners falling from that, and also the realization that I don't think CIFR is anywhere close to an Iris because Iris could fuel their own demand. Like I think that's the big difference between Iris and CIFR, where CIFR, Iris is more of an integrated like play where they can just like instead of just renting out their power and space, they actually do operate their own AI cloud. They own thousands of NVIDIA GPUs. They have the liquid cooling and the direct partnership with NVIDIA. So like I don't think they're waiting for a tenant to sign a lease. Like they're monetizing compute directly right now, and their costs are much lower. I think I want to say it's 3 cents per kilowatt an hour. Like that's one of the cheapest in the industry. Where CIFR, they're kind of positioning
4.8
themselves
cents.
as it's much higher. And
Yeah.
I do think that they are more of a
How is that
landlord.
possible though? Can I ask, like, how is it
Yeah.
possible that one, because this is a commodity business, there's no like specialty like technology that one person can have that the other can't? Like, is there something I'm missing here from a proprietary standpoint? Like, how is it that one could be so much better than the other?
That's a great question. I think it's more of a specific strategy early on. Like I also think that maybe Iris made a pivot much quicker than CIFR did, but also I think CIFR was probably trying to become the landlord, for example. Like there's a big difference on trying to just find a tenant for your crypto miner versus what Iris is doing, which is again, they have their own AI cloud. Like they're tackling two different spectrums. So like I think one was positioning as quantity. They know the inference, they know tokenization is going to 10x from this year to next year. So they made sure that economics made sense for that scalability. For CIFR, I don't know if that was their big rock. So I think they were just trying to tackle two different spectrums of the same AI utility play. Again, very new to the space, so I still have to dig in, but that's my initial take. But also why I still think the whole theme is going to move with each other. I don't. It's very difficult for me to believe that supply and demand difference. Like CIFR is going to struggle, but Iris Energy is going to do really well. Like it's hard for me to do that.
So I agree with you. I think it is all going to move together because they're all seeing the same tailwind. You know, if they end up going past capacity, then if they can't handle additional capacity, then it's probably going to go to the next guy.
Mhm.
Obviously, there's going to be a winner in the basket like there always is, and it does seem like just looking at the price action today. I mean, Iron held up much better than everything else. It was down just 1.8% on the day, but if you look at the chart on that, it looks like there's a green candle, so it closed up from where it started in the day. And then if you look at like CIFR, obviously very ugly candle. And my name in the space is Galaxy. I actually pitched it on this the last time I was on the show 2 weeks ago, and this thing went from like $27 when I pitched it to a high of $36, and today it pulled back 6%. I think part of that is, like you said, crypto. It has much more attachment to like altcoins than like Bitcoin mining necessarily, like the other miners do. So if ETH being down so much, it's highly correlated there. So obviously tech being down, it's all. I agree with that point.
Yeah.
I think like when I look at these charts, it looks like Iron is probably the strongest. Galaxy probably second strongest, and then CIFR is the third strongest. And I don't know, Shai, have you looked into Galaxy at all? Because it is a really interesting one.
I have, but I really am. I like hyperscalers taking a stake. I think it speaks volume when you have the back, because essentially CIFR has the backing of Google right now. I get it. It's like through warrants. I get it. It's like they kind of have to dilute their way in order to get a hyperscaler backing you. But I still think that's just poking holes in the theme that Google will keep coming back.
Well, what about CoreWeave? I know it's not necessarily a hyperscaler, but CoreWeave does have 800 megawatts of their data center contracted already.
They rent GPUs. They don't actually build data centers; they're more of a co-locator. So the reason why that they're going with these smaller players is because they have the whole stack from top to bottom. CoreWeave would be like they would be a lot more overhead when you're dealing with something like CoreWeave. But CoreWeave already is contracted with Microsoft and OpenAI, so that's where they're getting most of their revenue from. Yeah,
that's what I was saying. Yeah.
So IREN hasn't announced their partnership yet. So what do you think about from that perspective? Until that actually happens, I think the chart will probably continue to look good for IREN, as long as they make an announcement. Now, if 3, 4, 5 weeks come and no announcement yet, the stock's probably going to pull back, right?
I think what about CIFR being down 17%?
So they did an offering.
Google?
They did an offering.
But they land Google. Yeah, but okay, let's just in a vacuum. They land Google. Who cares they did an offering? Because that means that they're doing the offering to meet that demand. This should trade up.
But there is certainty now versus uncertainty.
Well, no, I also want to add that if you, for sure that, and also the sentiment on FinTwit alone today, it was vicious. People were freaking out. It's like in the risk on world.
I don't pay attention to that. Okay.
No, but I'm saying
like money, baby.
There was actual fuel on like these risk on names. Like there was actually a little fear. Like there was a little fear of holding the bag. I know it's like, it's crazy because if you zoom out, these names are still up significantly. But like I do think there was some fear on selling off today on risk on or profit taking because nobody really could pinpoint why everything faded so aggressively. No, like there really wasn't one reason. Like GDP growth, that was a macro front we got today. That was bullish. The final revision,
9%.
It was a big beat. Yeah, it was
insane.
A big beat.
That's insane.
And I think that we're going to continue cutting rates in October.
Sorry, what was the GDP thing? I missed it.
So what they do is they report the GDP. They already reported the GDP for Q2, but they finalize what the GDP actually is as time moves on. And it actually went up. It went up incrementally. I think it was 3.4% initially, and then they bumped it up to 3.9%. And
that's a big up. Oh my goodness.
I know.
Okay.
But we contracted in the first quarter. So it was more like a mean reversion in my perspective. But at the same time,
forward,
I mean, we are a growing economy. I think at a CAGR about 3%, 4%, no, 2 to 3% a year, so we had to make up for it.
And to be fair, it's backward looking at this point, so no one cares.
It is. I don't think the market really cared about that, and I think there is something that happened in the market. We don't have to go too much into it, but I think there is something that happened in the market that is causing a little bit of slowing down momentum, and I think a lot of that is there was a lot of play up in front running into the Fed cutting rates. And then it happened and the market got excited. Hey, we're getting 2 more rate cuts. And then it kind of fizzled down after that because it was like, well, what else is there to look forward to? Because we already know everything. So it was more certainty back into the market. So the market likes certainty, but when good news is the certainty, at that point, it's like, well, I need more fuel in order to continue going. But in order to get more fuel, you need to kind of pull back a little bit, get sentiment on the other side, and then bring that fuel back in to make it pop and make another leg higher. I think that the expectations got a bit higher where it was like, we need more news, and it didn't really get it. So what happened yesterday, because we're recording today on a Thursday, what happened yesterday on Wednesday was that Powell came on and he basically said there is no risk-free path to rate cutting, right? And what that means is, or what he explained what it meant is that inflation is still tilted at risk more to the upside and employment is still tilted at risk more to the downside. And I think the way the market took that was like, well, buddy, last Wednesday during that FOMC meeting, you were extremely dovish and now you're sounding cautious. So are you kind of changing your mind here? What's happening? And I think that's where the market chilled out a little bit was because maybe it's not green shoots until the end of the year, but also, the price is going to tell more as far as what the market sentiment is. And I mean, we got some charts breaking down here. Amazon is down below the 50 and 20-day moving average, and it just keeps on breaking down. We had a few more other mega caps that have broke down below those moving averages. And crypto, the most risk-on exposure you can think of at the market, is completely breaking down. So
wait. Can we just applaud my $230 sale back in February of Amazon and using that capital elsewhere? How's that?
Yeah.
You
That's
weren't
good.
right
That's
for a
good.
minute though. You weren't right for it because it was like above 230, but then you were right again. So okay, congratulations.
Oh, come on.
Well,
No, I think I
that
sold it
was
on
a
the way
baller
down.
sell. That was a baller sell. I'm not gonna lie.
Going on the rounds of patting each other's back. Remember that chart I sent you guys last week? I was like, every time SPY hit this level, there's going to be some wonkiness and some pullback.
Yeah, you did say the go to cash thing. You went 15% to cash. I will give you that. Good, good stuff.
So I do think that this pullback, I think it's just, if you look historically in the past like 7 years, like every time we've hit this overbought RSI level in SPY, we have pulled back somewhere between 9 to 34%. I know that's a wide range because COVID was a 34% correction.
34%.
That's the crazy thing. But like it's like 2021, we had, I'm looking at it right now. 2021, we had a 26% correction over the course of the year. 2024, we've had a 9% correction that lasted 1 month. Tariff wars. No, it wasn't the tariff war. It was the yen carry trade crisis.
Yeah, the yen carry trade.
In 2018, I don't know what happened there, but we had a 12% correction in a matter of 2 weeks. Pivot.
That was when.
So that was deeper than 12% though.
Yeah, it was like on the cusp of a bear market. No, it wasn't deeper than 20% on a closing basis.
So I was just, those calculations was based on when it hit RSI hit a 70 plus on the weekly and where it bottomed out. So it could have bounced and then went back lower, but I was just doing the first pullback.
Can I make a market prediction?
Yeah.
Let's come back on it later. I think like right now, I just looked up the SPY chart. We basically tapped the 21 EMA and then just bounced.
Yeah, I saw that too.
Look, tomorrow, obviously a lot comes down to tomorrow morning. By the time, this recording goes out, it's going to be stale because we'll already know the answer on some of this anyway. Whatever the pullback ends up being, whether, we rip right back to highs after tomorrow or whatever it is, I still think we end this year very strong. I don't think the pullback is here, but I want to say that 2026 is going to be the major correction. I'm going to go with that. So I think that we melt up from here. And I think 2026 is where I'm going to be a lot more cautious.
I believe that. I think we're going to hit SPY's going to hit 550 sometime in the next year.
Yeah, but 740 first.
Maybe.
But I think S&P 500 is going to 7,500. First.
Yeah.
And
definitely.
The reason why I think that is because people are so ready for a pullback. And I know I sound kind of objective to myself. And that's because, I'm a little bearish right now. I'm pretty bearish right now. But if we break that 200-day moving average on a lot of mega caps, then I think all bets are off. I think we're going to go down more, but we haven't exactly had that. However, if you look at the charts, dude, Amazon's breaking down, Meta broke down, Microsoft broke down, Netflix broke down, NVIDIA basically gave away most of the gains back today after that crazy engulfing candle. It doesn't look good. It doesn't look good. And then meanwhile, the things that are rallying are like these small mid-cap stocks that don't even affect the stock market. So it's kind of lopsided here, and small caps are leading the way down. And on top of that, crypto's leading the way down. So I think this needs to reverse. I don't mind a little digestion period here where we kind of go down a little bit, but maybe a fake out and then go back up. I think that's going to happen. But I agree with you guys. In the next year, I think we're going to have a pretty big pullback. But I think SPX 7,500 first.
Here's the tricky thing, though. I sound bearish on the near term. I think that there definitely is some multiple expansion on a lot of different parts on the market. But we are going through this cycle of efficiency that's only beginning. And I think that we saw glimpses of that this recent earnings cycle. I really did believe outside of NVIDIA and the hardware, this was the first earnings cycle we actually saw ROI or AI ROI on the inflecting, because Meta was just destroyed their bottom line. We saw a crazy reacceleration from Azure, Google Cloud. AWS will see a similar reacceleration. Their issue is more compute and energy constraint issues. It's not demand. Demand is absolutely there. They just fumbled the ball on strategy. And then we also saw Palantir continue to reaccelerate their AI party. And we saw MongoDB, Oracle, Snowflake, these data consumption, data infrastructure names just show crazy RPO growth and also reacceleration. So I think that we have the AI earnings cycle starting to layer in. And I don't think it's just a one-off. I do think it's a continued momentum. I do think that you're seeing RPO stair stepping. I think you're seeing a lot of the hyperscalers starting to really embed AI into their workflows. Like I'm talking Google, I'm talking Amazon, and tariffs should have been a drag on a lot of these names. They really should have. But I do think that we're seeing this reacceleration because all these enterprises, especially the CEOs that we talk to, they're kind of seeing automation and AI as the only way to offset all these rising input costs. And once they realize that their workflow with production doesn't actually diminish as much as they thought they would, once you include that automation into the workforce, that move is going to be permanent, and that's going to cause the efficiency era that we haven't really ever seen in these like tech companies. So I think that right now we're just seeing the psychology. A lot of people were surprised that there was no kind of September weakness. Now there's a little scrambling of like, the sell-off's happening, but like there really wasn't that much of a weakness as we began the first 3 weeks of this month. Like we thought a lot of the macro gurus thought that tariffs would slow hiring and that would equal recession. And we had some really, really bad macro numbers. I forgot which one it was. I think it was ISM manufacturing hit a 44. That if that report came at any other September, there would have been a massive sell-off because it was scream recession. But I do think that labor softness, which is what the biggest bear argument is on this GDP growth, is like the job market and labor softening. I do think that's being reinterpreted through the AI lens. Like I do think a shrinking workforce right now doesn't mean a demand collapse. I do think it's just another proof case for AI utilization that's going to be driving margin expansion for all these hyperscalers that now are becoming a bigger and bigger weight of these indices. So I think there is like a permanent shift that's happening that's going to be at the expense of white collar jobs. But if you're a shareholder, it's uber bullish. So I think there's like a weird thing where we should have a pullback, but also AI is still the main ticket event. And that is only picking up steam. It's not going away.
Yeah. I mean, you're seeing a lot of joint partnership in the mix. I mean, you saw Intel. I don't know if Trump bet the knee or if Intel bet the knee, but Intel basically bottomed. And Trump got the lowest bid, and then NVIDIA invested, what was it, like $5 billion into Intel? And then they tapped Apple for an investment. And then we saw today is they tapped TSM into an investment. And dude, like TSM is obviously Intel's rival. And they're tapping them for an investment. Like it's just Intel bottom. Like I cannot accentuate that any more than already. Unless something changes, I think Intel bottom because now they are becoming the forefront of onshore fabrication, onshore foundry for the US. And I think it's in favor of TSM to partner with them and also invest in them because they are the US foundry. They're the foundry of the United States of America. The government has a stake in them. TSM is building an Arizona plant, but Intel's already here, right? So I think this might be a time to kind of recognize that I don't think this is going to end anytime soon. If the goal is to bring all the manufacturing onshore, and most of the manufacturing jobs are really coming from, most of the new jobs are really going to come from a lot of these semiconductor plants that are being built here, and also with AI, I think there's going to be more demand for onshoring just to reduce costs. So with that being said, I think we're getting to the top of the hour for us over here. We don't really want to exhaust it because we are pending that news tomorrow. And really everything that we could say when this episode does come out could be stale by the time the PCE data does come out tomorrow, which is Friday. But were there any closing thoughts you wanted to add on, Logical, before we sign off?
No, just take it day by day. Don't get overexposed in something if you don't feel comfortable. It's okay to pay attention to technicals right now. I had a post recently where I basically said like, hey, look, fundamentals are great, but obviously valuations have gotten stretched. The best way to manage risk from here on out is technicals. So if I notice something breaking down or violating some moving average support, I'm going to be very quick to cut it. I'm okay to book some losses, write off some of my gains. No big deal. No sweat off my back. Call it a day. Move on. And focus on strength, which has been the bios lately. And I still think there's a lot of good bio candidates out there. So hopefully we see some movement up in that direction headed into JPM conference in January, which is the biggest healthcare conference of the year. So a lot of excitement in the next few months. And yeah, the next Fed meetings will be interesting too.
Yeah, for me, I've been a little selective with my ads. You guys know I have a 15% position. I think now it's at a 14.3% position of cash. I've been doing a little adding. I think Rubric, Amazon, were some names I've added recently, and I think that I know we have different time horizons. I do think Amazon is just being that should not be the lagging Mag 7 name. Like the AI tsunami is not coming for them. They absolutely have an AI lifeboats, but the market is like penalizing them for a lot of things that are one-offs and misinterpretations on what their actual numbers are. So I'm taking advantage of that, but being very slow. Either way, be safe out there, guys. VIX is still in the teens. I
Which
think
is
that there
wild
might be
to
more.
think about
Yeah.
at this point, because it's acting like it's in the 20s right now.
It's not even like there could be more pain ahead. But also, I just think long term, like we are early in a secular bull run. Like I think that we are early. Like maybe we hit 750 first. I think 700 and we pull back towards some digestion period. But who knows? All I know is that I have the dry powder ready. I have my conviction list. I know what I want to add if we actually get some blood in the water.
Yeah, no, I agree with you with that one in Amazon. I mean, you guys already know it's my biggest position portfolio. I haven't added to it yet. I'm expecting some weakness in the market, and I think Amazon's leading the way down. But at the same time, I mean, I'm very bullish in Amazon, as you are as well. Largest hyperscaler of the entire world. It'll take a little bit of time for Microsoft to catch up to Amazon. But I think that the consumer impact from tariffs and also the consumer weakness is probably a little bit overblown for Amazon. I think the market is underestimating how much this company can pivot and how much reliance they have in AWS. That's where most of their cash flow comes from. Like, let's be completely honest. Like, I would not own Amazon if they didn't have AWS. There's just not, I would rather own Mercado Libre, which I do. I think there's a lot of alpha to be made in markets outside of the US as well. Not necessarily other stock exchanges, but emerging market companies like Grab Holdings, which is near 52-week highs, Nubank, which has hit all-time highs every single day, Mercado Libre, which is having a little bit of weakness. Like those names, like I feel like there's so much more force to the upside for those companies because these are in emerging markets that still need a lot of catch up and haven't even seen the AI tailwind, which is going to start to spread out across the other nations. So I think there's green shoots ahead on the other side of what we might see in the next few months. But yeah, I would probably look to add some leverage to Amazon if we do get a little bit of a pullback in the form of like leaps or something. But same thing that Logical said. When those move, like what I did last time we had the pullback from February of 2025, I pretty much de-risked all of my leverage positions when we really started the breakdown of the market. And I have no problem doing that again if it happens again. Other than that, the rest of the portfolio stays as it is. You know, I like to trim, add a little bit here and there, but like the long-term portfolio just stays long-term, man. I really don't think we're going to come to this anytime soon. There might be a scare, but I think that's going to be a shakeup. So with that being said, guys, I don't think there's really anything for next week. But before I know, there's gonna be like 20 events for next week that I never even heard about. So we'll see. And yeah, hope you guys enjoyed this one. Tune in next week. This episode, of course, is going to be available on YouTube as well as Spotify. You can also watch it on X, where we release it primarily. And we'll be back again next week, guys. Take care.